Welcome everybody, SF Live, episode number 51 already. My name is Kai Hoffman, I'm the CEO of the Soar Financial Group. I am joined by Jean-Marc Lacoste, President and CEO of Monarch Gold. But as always, before we switch over to Jean-Marc, please use hashtag AskMQR for your questions. We already got a lot of questions in today, so we're going to change up the format just a little bit because one of the Twitter followers, or one of the Fin tweeters that someone you should definitely follow, Jim Foster, send in a lot of questions, so we're going to go through all of his questions with Jean-Marc, ask them, so that way we don't miss out on anything. The company's put out a lot of press releases, and we're changing the format just a little bit there. So let me introduce Jean-Marc now, and he is just north of Montreal, and Jean-Marc, you're live. How are you doing today?
Very good. Yourself? It's nice to be here live with you and hopefully answer some of your questions.
No, I appreciate you joining us. And you guys have been really active despite COVID. You guys didn't drop the pen and disappear. You put out a ton of press releases, important press releases, milestones, and deliverables that we should dive into. Right? But first of all, I know it has been answered somewhere else, but the original idea behind SF Live was to keep investors informed of what companies are doing during COVID and Corona crisis. So give us an update on what you have done lately, or just how you react to COVID.
So just to make sure, because the connection was off for a second there. So basically, how did we make it through COVID since March 13? Is that your question?
Yes, exactly. So
yeah,
that was the first part, and then we don't want to spend too much time on it because I think we're at the tail end of this right now. So I just want to see, like, just because you put out a lot of press releases, right? So let's you've handled it obviously quite well.
Okay. So basically, I think we managed pretty well. We were fortunate enough to be in care maintenance at the main mine operation that we have right now, so we didn't get too much impact. Most of the drilling was getting ready to be prepared, so we were kind of lucky. So we're not a big team. We're less than 30 people right now with the consultant and everything. So we managed pretty good. I think it was probably better for the gold sector as a whole.
No, a lot of people put their heads down and actually did a lot of work and technical work. So it's quite interesting to see what's coming out of this now. Let's go through the questions, and let's not go through the press.
Kai, I'm gonna have to stop you because I can't hear you.
Oh, sorry, my mistake. I switched the microphone because we had some issues here on technically. 1 second. And it's just a Skype thing that you can't hear me. And there we go. Now you can hear me. Sorry. People could hear me because I changed my microphone settings in the broadcasting software real quick because there was a bit of an issue there. So apologies for that. We're back on track. We're going to go through the questions real quick, Jean-Marc. Instead of going through the press releases individually, because I think we're going to touch on all of them during those questions. And I want to start with Wasamac. And as I said before, please follow at JFosterTM on Twitter. He's posted all of them. And the questions are also available on Twitter. So I only did structure them a little bit so that we could go through them project by project and in general terms as well. Let's start with Wasamac. Okay, that seems to be your new flagship asset. Like, it's the biggest one in the portfolio. And the question starts with the Wasamac property is characterized as a potential higher margin underground operation. The mineral reserve averages 2.56 grams per ton of gold, which is relatively low for an underground mine. What will make this high margin, and is there an underground mine operating that is analogous?
Yeah, so that's a very good question. It's something that we get a lot when we present the Monarch and the Wasamac project, and I'm happy to answer that question because it's going to clear the air a bit for that particular project. So in Abitibi, the average grade for some of the mines out there are between 6 and 8 grams. And it's usually narrow vein mining, 1 to 3 meter wide, and you have to follow the vein. There's a lot of dilution, and it's complex to follow the different mineralogy in the mine. Now, in the Wasamac project, we are mining what we call the disseminated envelope. So the zones are basically 40 meter high, 20 meter wide, and they're the width of the deposit goes between 30 meters to 70 meter wide. So it's a very easy type of mining. You follow the color. It's not a narrow vein type mining. So we make up for the operation by doing very big tonnage per day. So the Wasamac project is, we have some zones that are 70 meter wide, and we will do 6,000 tons per day. So at a 6,000 tons per day with the Railveyor technology, which is the system that brings back the ore back to surface, you have comparables next door with the Goldex from Agnico. They mine 1.8 grams per ton. Again, 6,000 tons per day. Same thing at Young & Davidson from Alamos Gold, which happens to be our biggest shareholder. They are mining about 6,000 tons per day at Young & Davidson. And again, the grade is similar to Wasamac. So sometimes people look at the grade and they try to put the equivalence in Abitibi, but this is a bulk mining underground geology, and it is much easier, much less dilution, and that's why it is extremely profitable, producing an ounce at $550 US per ounce produced during the 12-year mine life.
Okay. The second question relates directly to a press release you just put out, and you just signed an MOU with Glencore. And the question is, like, do you have any NPV numbers, feasibility or internal scoping for an offsite milling scenario for Wasamac? And that's sort of in regard to the MOU you signed with Glencore, because they'll be processing your material. Is that correct?
Yes, it is correct. So we don't have the actual 43101 feasibility NPV, but here, what I can tell you that's going to make you understand that it's not that big of a difference. The current project is 460 million capex with the building of the mill and tailing facility on site. The NPV, I was asked that as well. I saw on Twitter some question. The NPV currently sits at $1.3 billion pre-tax. And I will answer another question that I saw. The after-tax NPV is probably around 750 million as we speak. So the pre-tax 1.3 billion, after-tax 750. The pre-tax 45% IRR, 33% after-tax.
That's at $1,700 gold, or what price is that? Those numbers?
This is at $1,700 US gold, and it's going to pay back of about 2.8 years out of the 12-year mine life. I suspect that the payback might be closer to 2 years with the price of gold right now. So that being said, the NPV, if we do take it to Glencore, the advantage is we know right off the start the 464 capex, 230 million, basically 50% will be cut off from the original capex by putting it on a train and taking it to Glencore. Now, we will probably have a 50 or 60 million dollar upgrade to do at Glencore's mill. So let's say all in all, we'll probably save 150 to 200 million on the project of the original capex. So definitely the NPV should go up with all of this. The OPEX itself, we're hopeful that it's going to be indifferent because we think the facility that being already built at Kid Creek might offer some decent aggressive rate for OPEX. And the train company already floated some rates. We're in discussion with them at the moment. So we feel that the overall project NPV shouldn't be affected. And if it is, it's going to be on the upside.
Yeah. What's the timeline on that? It's like I skimmed through the press release this morning as well, and it looks like 2023. At the end of 2023, you're going to make a final decision on whether to start up the mine or not. Is that correct?
Actually, it's going to be much faster than that. What we're going to do is in the first this summer, hopefully in the next few days we can announce something on that front. But this summer we will be doing the feasibility or pre-feasibility on the upgrade at Glencore. So by the end of the summer, we'll have some numbers of capex to put in our formula. So by the end of September, let's say we have that number, Andy, we can turn around and sit with Glencore and say, okay, this is all the numbers are adding up. We really want to move forward. So we will enter a 6-month period of negotiation with Glencore. Once that is signed, we could do a fast track permitting in Quebec because we will no longer need the permitting for the mill or the tailing facility, because once we have a full toll milling arrangement with Glencore, we won't need the process for the environmental process for the milling and the tailing funds facility, which should speed up the project. in the MOU that you saw, the press release, basically what it's stating is they're expecting the first rock to their mill at mid 2023.
Okay, that's what it was. Okay,
so
that's what I read then. Yeah.
meaning we would start building in 21-22.
Fantastic. Okay, so that's fast tracking to production now. I like that. Okay, a couple more questions on Wasamac as well. What's the general plan for exploration and development, and do you also plan some deep drilling?
Most of the exploration at Wasamac will be done once we put the mine in production, because most of the exploration that is worth looking after is at depth past the 800-meter level. So because we're going to be in mining for 12 years, there's going to be sufficient time to drill lower and hope that this project could become from a 12-year to become a 15 or 20-year. And also there's a little bit of hopes laterally. All of this will be addressed once we start, because the current project as we know it is very lucrative. It's very cost efficient, very low, very high margin. So we're very anxious to put this thing forward and deal with the exploration blue sky as we go along.
Fantastic. Okay, let's wrap it up there on Wasamac. We might come back in the Q&A if we're going to check on what's happening on Twitter. Let's talk about Beaufort real quick. So your presentation indicates that the Beaufort mine has a 42,500 meter drill program planned. What's the objective in terms of grade and tonnage? What do you plan to achieve there to restart the mine? What's the goal in your business plan? What do you need to hit that it makes sense to turn it back on?
Okay, so just for historical purposes, we acquired the Beaufort mine from Richemont in 2017. This mine itself produced for the last 30 years 1.2 million ounces of gold. Mostly until June 2019, it was running at a rate of between 25,000 ounces a year, up to 45,000 ounces in the good years when the grade was much higher. So we know currently we're sitting at a 5-gram reserve for about a year ahead of us. The goal of the 42,000 meter campaign, we're going after the 3 to 5 meter wide zones that are at least offering a 11 to 17 grams per ton grade, because we already have selected 95 targets, which will be part of the 42,000 meter campaign. And so we're going after the high grade. So we're hopeful that with this campaign, we will have had multiple years of reserve at a much higher grade than we were mining last year. Just to give you an example, when the last year that we worked at Beaufort, we lost $1 million, produced about 13,000 ounces, but we were in a winding down. We announced a year prior the closure of the mine temporarily. So we produced 12,000 ounces. And we lost $1 million. At the current price of gold, if we would do a copy paste of that year into this year, we would make $8 million profit. So we know this project, if we could just bring it to 25,000 ounces a year and bring up the grade a bit, it could offer a very good, nice cash generating operation for the Wasamac development.
Okay. For Beaufort.
Yeah, but the money will be used to advance Wasamac.
Got it. No, that's
we're getting there.
Okay, fantastic. What's the cost of the planned drill program?
It's $5 million, and it's been put forward by the Quebec Pension Fund. So it's always good to see the local funds at work to make sure that we keep jobs locally, and they feel that this will generate potentially 100 to 150 secure job in the coming year as we restart the operation.
Fantastic. Did they invest on the project level or company level?
At the project level, so it's non-dilutive to current shareholders. It was a decreasing margin royalty, so 3% NSR that will be reduced to 1% over time. So it's a very encouraging investment because it doesn't suffocate us too much, and it makes us see the blue sky and advance the project in a much more dynamic way.
Okay, perfect. Let's talk about other projects for a minute before we come to more of the general aspect and cap structure questions. So what is the drilling plan and schedule for the Mackenzie break?
So the Mackenzie break, we've been very fortunate because the drilling plan at Mackenzie were very humble. It was small program after another, and we were humble but very lucky. So the last campaign, just to give you an idea, was like 6 drill holes, and we hit a 7-meter zone of 33 grams material at a depth of about 300 meters. So we're going after that zone. We just finished about 4 drill holes about 2 weeks ago. Everything has been sent to the lab. There'll be more results, and hopefully this follow-up drilling will prove the zone, and we'll probably start accelerating the program. So I would say we will probably spend $1 million at Mackenzie Break in the coming year. And because we like what we see, we like what's developing on that project. So as you can see, we can walk and chew gum at the same time. We have a dedicated exploration team that is looking after that operation. And this could be a surprise in 2020.
Okay, fantastic. And is there a budgeted amount of resources that justify mining at the local mills on care and maintenance?
We will. So can you repeat just the question? So the mill at
yeah. So is there a budgeted amount of resources? Are you looking for a certain amount of resource that would justify toll milling at other mills in the area that are currently on care and maintenance?
Yeah. Right now, the 2 mills that we own, we own them 100%. So it wouldn't be a toll milling arrangement, but the Beaufort restart will definitely be considered to go back to the Beacon Mill or Camflo Mill, which was using Beaufort. We're looking for a potential production of 400 tons a day. The mills that we own combined, they have a 2,300 tons per day capacity. We've been approached in the last few weeks, as you can see, the price of gold, by about 3 or 4 miners that want to come and do custom milling with us, and we will consider every part of custom milling business because it was very lucrative for us in 2018 and 19 with the Wallbridge project and Cisco Visa project, and also we milled a lot of the El Dorado project before they started. So these things are very good for the bottom line of Monarch, and they'll be considered. But the rest assured, we're working in every different ways to make sure we fill our own mill ourselves.
Yeah. All right. Let's get more to the general part and the cap structure questions. And you recently announced the financing, and Yamana took a big share of that. I think they invested $4.2 million in you. You already had Agnico Eagle, Hecla, and Alamos Gold at the table. How are they all working together, and how would you bring them on the same table without them killing each other?
Yeah. So the good news is we did it progressively. The Agnico shareholder base is due to the fact that we acquired the Mackenzie and Swanson project from them. As a junior company, we worked out details so we could pay in cash and shares. So over time, and we still have 2 payments left to Agnico to acquire these properties. So we were issuing shares. So this is how Agnico came in as a shareholder. They're supportive. We meet them at least once a year to give them an update on what's happening. Now, the good news is the next door neighbor to Camflo, and I'll get back to that because we made an announcement this morning. But the neighbor is the Canadian Malartic mine, which is co-owned by Agnico and Yamana. So having Yamana knocking at the door a few weeks back to come in was a very good news for us. We know that Canadian Malartic Mill could be an option as well for Wasamac because it's a huge mill. So we will welcome them as a shareholder, but Yamana wanted a very good involvement. They asked for a board seat, and we will be working with them at the technical level because they have a great technical team that is used to projects similar to Wasamac. So we're very happy and anxious to see what we'll be doing with Yamana. The Alamos position was inherited by the position of shares that we gave to Richemont prior to Alamos acquiring Richemont. So when we bought the assets of Quebec, Richemont was issued a block of shares, and Alamos inherited those blocks. And until recently, they were very good supporting people. And in the last financing with Yamana, to our great surprise, they came in and they exercised their right to keep their position, which was received as very positive news to know that they want to keep a good chunk of Monarch and see how we go along the way. And remember, they have a Young and Davidson project that is similar to Wasamac, so they know the business, they know Canada. They're one of the best operating company with Island Gold and Young and Davidson in Ontario. So those guys are sitting nicely with front row tickets looking at what Yamana is going to bring to the table. So I think it's fun to see the recognition from the big tier guys. We're hopeful that everybody's going to work in a friendly manner for the next few months, and that was a big excitement for us.
Okay, no, that's fantastic. And you answered a couple of the other questions you already posed, like what resources do each of these companies provide to you? You said technical expertise, they're coming on the board, so that's been answered. So the next question is like, what is your philosophy in regards to drilling versus shear dilution, and how do you balance that?
So I think Monarch speaks for itself. When you look at the last few years, we were in a bear market, and we took a decision very early on in 2013-14. We had a choice to do like some of our peers and drill, or go outside and start acquiring ounces. We acquired ounces at unbelievable prices. Just to give you an example, in our portfolio, we have a bunch of shares from Probe Metals, from O3 Mining, a big block of shares in Unigold. We bought the big block of shares of Unigold at an equivalent of $2 per ounce underground. So we know the industry right now is trading at $50 per ounce underground. We just sold the secondary project, the Fayol project, to IAMGOLD for $11.5 million. This is an equivalent of selling that project for $175 per ounce underground. So we acquire most of our ounces over the last 7 years at close to $5 on average per ounce underground. So I made a very early decision to acquire ounces instead of drilling for ounces. And the model has worked. And today, what you see in Monarch is we're starting to see the fruit by selling only 75,000 ounces of the 3.2 million ounces to IAMGOLD. We got a check for 11.5 million. And that property was acquired last year, less than $5 million. So this is the type of stuff we've been doing. I have a feeling that the market is slowly turning and the drill results will pay out. Therefore, we're concentrating at Mackenzie Break, drilling like crazy, because now we believe the value is coming back to those drillers out there.
Okay, I'm going to save his last question for the end, and we're going to switch over to Twitter, because we got a lot of questions in on Twitter. So I didn't expect it. It's great to see that, the involvement here, which I'm really happy about, because that's what that format is all about. And Kip Keen is asking, unfortunately, you can't see the question, Jean-Marc, but I have them here on the screen, and our viewers can see them as well. And Kip Keen is asking, how does the Glencore milling proposal impact projected cash costs? And do you think 550 ounces cash cost per study so far is optimistic?
It's optimistic, but at 550 US, we have a little bit of room to maneuver. I don't think the Glencore will reduce that cost that much because it's mostly impacted by the OPEX. So I think 550 US. Let's say it's a nice number. Will we produce at 600? Maybe, but it gives us room to maneuver at the current price of gold.
Okay, fantastic. Next question is from Marcus at Marcus S699, and he's asking, how much annual production do you expect at the Beaufort mine, and what all-in sustaining cost do you expect?
So the Wasamac mine itself is scheduled to produce 140,000 ounces a year for 12 years. The all-in sustaining cost will be about 630.
He's asking about Beaufort.
Oh,
sorry.
The Beaufort mine might be a bit richer to produce depending on the grade. When we closed the Beaufort mine, the last few months we were producing 4.5 gram material at about 1700 Canadian. So still at 2,400 Canadian, we would make a lot of money. But we're hopeful that the reserve that we build up will be at a much higher grade, therefore reducing the cost hopefully to the 1,300 or 1,100 Canadian per ounce. Sorry to mix the currency, but that's the way Beaufort is talking.
Yeah, no, that works perfect. Next question is from Cornelius Chong at Metalcorn333 on Twitter, and his question is, what was the rationale for the decision to sell Fayol at such a low valuation? It seems there could have been more potential, and maybe that's the second part. I'll get to the second question because it's in regard to drill results. So why did you sell
Okay, so no, I like the question, and trust me, it was not an easy decision, and I'll tell you what went on in the last few weeks as we led to the selling of Fayol. Because of COVID-19 and the pressure in the markets, gold slowly turned around. Monarch was trading at 12, 15 cents during the crisis, and then it climbed back up. we only had about 2-3 million of real hard dollars at the bottom line coming into the end of April. We knew that the case was coming in to sustain the Beaufort development, but we were looking at our cash account and we said, okay, we have a couple choices here. We go to the street, we get diluted, or we figure out a way to sell Fayolle at a decent amount. And because we had internal feasibility numbers that were coming out on Fayolle, we realized that to put this open pit in production, it would have cost us between 25 and 35 million dollars. So think about this from our point of view. We had about 2-3 million in the bank. We don't want to over dilute it because we have Wasamac ahead of us, and we have a choice. Do we take 11 million cash or cash equivalent in IM Gold stock now, or do we turn around and say we don't want your money, but we know we have a ticket for 30 million ahead of us for Fayolle only open pit that could take about a year to be permitted and then in production. So the crisis and the crunch on the cash would have been too hard from a plus 11 million that we have now on that transaction versus minus 30 million we would have by trying to put it forward ourselves. We went for the cash, and little did you know that the Caisse de dépôt, the Fayolle sale, and the Yamana injection, now we're sitting with 25 million in the bank and 3.2 million ounces still ahead of us. So I think it was a strategical decision. And trust me, until midnight the day before the announcement, I was questioning if I should shop around to get a partnership at Fayolle. But the cash was very hard to find. And I think IM Gold is a great partner to have and a great diversification of the asset.
Okay, perfect. He was asking also about drill results coming out and maybe a bit of a production plan. But I would personally, since I'm not familiar with the asset, like the question is, is there drilling plan on Fayolle, or is that?
The drilling was actually stopped. We were in the feasibility stage. We didn't publicize that, but we were about to publish a feasibility in order to go in permitting and eventually mine the open pitables for 60 to 70,000 ounces. So that was the original plan. So we were not going to drill. It had a lot of good grades. We liked the property. Just, we have a lot in our portfolio, but we got to be smart as we advance these things. And our goal, if you look at the front page of the presentation, is to become 150 to 200,000 ounces a year gold producer. And that's going to be achievable with Wasamac as a head start and maybe Beaufort and Mackenzie as secondary assets.
Okay. You almost took my last question away from me there, but I want you to be a little more precise. Okay, we've got a couple questions on Twitter, and honestly, like looking through the deck, I had the similar feeling to a degree, because especially I was trying to look at different sources for information as well about Monarch, and your strategy at the beginning, and now, like after our discussion here, it's a little more clear as Wasamac and Beaufort, but you have your hands in a lot of different pots. So TD Simmons is asking on Twitter, what is MQR's identity? What is the focus? Your hands are in a lot of different things, from strategic investor in Unigold to project generator to the explorer to developer and small producer at Beaufort. I honestly just don't know what you want to be as a company, right? So based on our discussion, I have a better understanding now, but I think let's define that and give us a clear answer. Who do you want to be?
Okay, so I like that question because it gives me a chance to explain what Monarch's been all about. And I think I did earlier in the other questions. But basically, as we build a portfolio, it took us 7 years to build a portfolio. And all these assets were bought from over 10 different companies, from different parties. So it took us a long time to build the asset. But if you look at the mothership or the main asset, the flagship project, Wasamac, we had to build a reputation as deal makers and growing the company in order to convince Richemont to sell us Wasamac. So sometimes people look at our portfolio and say, oh, you guys have a lot of things, but we had to build this portfolio to show who we were. And now we're proud owner of one of the biggest land package in Abitibi of over 300 square kilometers, over 3.2 million measured and indicated categories. So I know they're spread out over 6 different projects, including the Camflo projects that we announced this morning. But we own 100% of all these property, and don't be fooled. The main project, the flagship is Wasamac. All the other assets were acquired in order to push the Wasamac forward and get 140,000 ounces a year. But in the process of doing these things, we had opportunities. The block of Unigold is a good example. Last May, we had an opportunity when one of the biggest shareholder was a bit frustrated with the advancement of Unigold back in those days, and he offered us an opportunity to buy a huge block of Unigold at 10 cents. The stock is currently trading at 35. In order to help the company get a better vision moving forward, which we did, and it actually turned out to be a great investment. If you look at what we did in Unigold, and I'm not going to spend too much time on that, but it was like at that time, Monarch was trading at 25 cents. It was like in today's term, issuing stock at 75 cents. So if you look at the transaction, it was great because you have two choices. You could look at a company that keeps issuing stock and diluting everybody to drill or do different things. Or you could look at management like us who are always trying to find a ways not to dilute you guys. And when we do it as the best deal as possible. You know why? Because we have management with skin in the game. I got 4 million shares. My VP's got 3 million shares. We're all in this together and we want to make value to you guys. So the portfolio was built in order to get our hands on the Wasamac. But in our portfolio, little that you know, we're drilling slowly, couple grand here, couple grand there at Mackenzie. I'll bet you we're going to have a big surprise at Mackenzie. And all of a sudden, this asset could be, diverted, sold, or even advanced, and it could become a super high-grade underground deposit. So people look at Barrick, at Newmont. They're running, tens or dozens of operations around the world, and nobody questioned the fact that they have a lot going on. We're doing it at a very small scale. But this small scale is for one purpose only, is to make you, the shareholder, make more money and actually run into a profit. We're not there to stay for the next 20 years as CEO. We're there to make sure that you're making money. My uncle, my mother, my friends that are in the stock with us will make money. And that's the only way to do it.
Fantastic. I should stop you right there, but I really want to know what's coming up in the next 3 to 6 months.
Okay, so 3 to 6 months, a lot of advancement that will be focused on Wasamac, of course. We will be drilling 42,000 meter at Beaufort, so expect a lot of good grades coming out of that. Think about it. We're only down to 800 meters, and it produced 1.2 million ounces of gold. I have some rocks at home with visible gold from Beaufort that are unbelievable. So the best is yet to come at Beaufort. Look at West Dome with Kena Deep. They did a hell of a hit doing some exploration like that. So we're hopeful that Beaufort didn't say its last word. And finally, but not least, on the top 3 rank, I believe Mackenzie Break will deliver something spectacular in 2020. I'm hopeful. I like what we see. I like the fact that the zones are getting bigger and richer. So, hang in there. We have a lot to tell, and you won't be deceived. And hopefully, we'll release something new every week.
Fantastic. Jean-Marc, this was the longest SF Live we've done so far, but it's been super informative. That's why I let you speak. It was great. We got a lot of great questions in. So, Jean-Marc, thanks for coming on. And to everybody else, really, really appreciate your questions. Please follow at JFosterTM on Twitter. He asked most of the questions here, but that's the idea of this format. We're here not to show off how smart or dumb we are. We're here to ask your questions and interact with the CEOs for you on your behalf. And please follow us on Twitter, follow us on YouTube. Make sure you subscribe to our channels and hit the alert buttons when we go live. You'll get notified. Thank you so much for tuning in, and everybody, we'll see you soon.